What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today I'm going to be looking at a property on Lofty, showing you a little bit of the due diligence that I've been doing. I think it's a pretty interesting property. It's one that is put on by Earl Co., who is a co-owner manager of another one of the properties you've seen me buy on here. I've talked about, which is 90 Madison. Um, I'm going to go through some of the due diligence I did on it, tell you a little bit about the property. But then I also want to circle back to a mistake that I noticed I've made in my other purchase. Um, and then talk about a couple of things that I think are like important lessons for this site. And also, though, some of the added benefits. Some of the things, or one thing that I think really separates investing on a platform like this from investing in real life. But so here's the property. It's a 3 unit and I have no idea how to say this. Water Vliet. I don't know how you stick a V in the middle of a word like that and say it. But it's 724 Third Ave. It's close to Albany, New York. But I checked out this market first. This actual city. Historic city. It was it's pretty interesting. But it's had moderate growth in the last couple of decades. Prior to that, it was shrinking. I don't love it. It's not. This isn't rapid growth, but it's also, it's the fact that it's not continuing to shrink, it makes it a market that I wouldn't just rule out for that reason. And then I looked at Albany County, which is the county that it's in. Um, and, it's had a little bit better growth and over a longer period of time. So thought that was pretty interesting. I also looked at the Zillow, home price trend, which looks pretty strong. It's actually pretty similar to the New Jersey one I was showing the other day, the Atlantic City one, which was also very strong. Um, I started looking at a bunch of these, and I have a little bit of a theory I'm developing, and I don't know that it's 100% accurate. But most of these stronger trend lines that I've noticed have been in markets that are sort of these old markets where you don't have a lot of new construction within whatever zip code it is. And so one of the things, like I know in San Antonio, our median home price has been going down. And so if you just looked at this trend line, it's going down. But if you dig into the numbers, the reason our median's going down is because there's a ton of new construction that are smaller homes. And those are most of what's being sold today. And because they're so much smaller than our old median, it brings the median home price down. But when you compare year over year per square foot sale prices, you're not getting that same decline. And so I think it's possible, and I don't know that it's the whole story, but I think it's part of the reason why some of the older markets I've looked at have had much less of a dip, and some of them are just continued pretty much straight up. It's because they're not having that same effect. They are more supply constrained, and so it's a good thing. I mean, this property has had significant, or this zip code has had significant appreciation over the last year. They're not predicting it to continue, which I think is good. I very rarely believe that you'll just keep having strong growth just because you've had it in the recent past. But I do like to see a positive trend, right? Um, so I thought that was good. I looked at the value, right, at a $50 token price, and you can see right now it's 46.58. That ends up being 233. If you look at $47 and times these tokens, it's 220. Which is basically what this property, which is what this property appraised at the time they brought it to the platform in April. Now, if you believe that 6.8 appreciation last year, well, then I think it sort of justifies that house canary value being a little bit higher. And so maybe we're getting a slight discount on this, although it's not a huge discount. When I looked at, oh yeah, this was weird, homes.com, which I usually like. It just had a crazy, yeah, I mean, this is just a completely worthless spread of values. I can't remember ever seeing this before. Zillow had a lowers estimate, but then gave a range, and it's within that range. And then Realtor again gave a lower estimate, so it doesn't really feel like we're getting a discount on this one. And from all the ones that I've looked at, we have been getting really strong discounts, but that's been primarily on ones in shrinking markets and where they're not performing. And so, that's really what I've been calling the discounted token strategy, right? Where I'm just buying those discounts, hoping to just sell it in the real world, and making the money there. That wouldn't be the plan for this. This would be a buy and hold for yield. It is currently yielding 11.37%. It is, which is pretty strong considering this is, it's very low levered. It's, I think, 30% LTV, paid for by Earl. But, I always still want to know what that leverage amount is because it adds risk to the property, right? Like that lender can still foreclose if it's not paid. So having 30%, I like that. And that's why there's doesn't have the same type of yield as some of the short-term rentals he has, but also because this is a long-term rental. And so long-term rentals, I expect to make less cash on cash return, but it's also a lot less volatile, right? Now you can think of that as being a negative because on this platform, volatility leads to being able to pick up pick up discounted tokens. So I don't know. It's a weird trade-off, but overall, I prefer the asset itself to be a solid performer. Have a long-term rental. I'm always happy to take a lower cash-on-cash return than I would for the same, a short-term rental in the same market, right? Because it is, um, there's a lot less business risk in a long-term rental than a short-term rental, basically. One of the things when I started looking at these pictures that really shocked me is just how rough this unit was. You can see like there's a board up there. The kitchen just looks terrible. The paint isn't great. And I was really surprised by this because, again, like I said, I mean, I bought one of Earl's other properties. I think he does a great job managing. Did I already show you this? This is why he's one of my favorites on the platform, is he provides these, on a monthly basis, gives you true P&Ls with notes letting you know everything that's changed. If there's something that's out of the ordinary, he lets you know. This is the type of reporting that I really expect when I'm investing alongside somebody when they're, and as these co-owners are, that's, I really think of them a lot like a syndicator in a traditional real estate investment. And so or the sponsor, right? The person who's really running stuff. And so I want someone who's doing that is gonna be, completely transparent in what their numbers are, be able to put these out. And so I really appreciate that he does that. That's one of the reasons why, I'm trying to pick up more of his properties. One of the other properties that I own quite a few tokens in, we're trying to get him to take it over as a manager. But so, that's one of the things that I think I really like about him. And so I was shocked when I saw the condition of this unit. But he does have a note in here that the person in that unit's been there since 2011. It's rented way below market. He just doesn't want to move that person out and renovate. He doesn't want to force them out. He's just going to wait for when it, he doesn't want to basically displace someone who probably can't afford something anywhere else in the market, for that price because of how cheap it is. Um, you know, I'm sure that's leaving some money on the table, but at the same time, like I think it's okay to be human when you're investing in properties like this. Like it's okay to make a decision that's a little bit suboptimal because you're trying not to kick someone out of their home. Right now, at a certain point, you don't want to let their rent get too far under market. But I wouldn't just want to kick them out just so I could renovate and charge a higher rent. Um, so and when you look further into the pictures, the other units look much more like what I would expect. It's still, yeah, now we're in there. It's still, affordable housing type unit. It is, workforce housing. It's not some beautiful kitchen or fantastic renovations, but it's, it appears to be much more clean and painted and functional than that one unit. That's the first one we saw. So I want to point that out because if you just jumped on here and just looked at the first couple of pictures, it just looks like this property is completely trashed. Um, which this might be part of why there's a little bit of a discount here, right? So I like the income of, I mentioned like the manager. The market's sort of interesting to me. It is a very small market, right? I mean, the county's perfectly large, perfectly fine size wise, right? 300,000, but the town is only 10,000 people. So didn't really love that. Um, but then and I think I already showed you, yeah, appraised at 220. Um, but then I jumped into the FEMA flood map, and it's in this. Um, and I'll show you the appraisal actually has a better picture of the flood map. With it's called out better, but the way it's described, easier for me to read anyway. And so it's you see it's in this yellow, and that yellow is moderate and minimal risk area, but it's not in a FEMA special flood hazard area. And so sometimes you see this where like uh, this blue is the actual AE zone, but this is like, they say, okay, 0.2% annual chance of flood hazard areas of 0.1% with average depth of 1 foot or less, or, whatever, you can read this. I'm getting a little tongue tied there because it's just late and this is actually my second time doing this. I screwed the first one up pretty badly and just decided to scrap it. I don't typically do that. I think you probably noticed that. I just am willing to ramble for 30 minutes and hope that you get some value out of it. But I think I spouted way too much nonsense in the last one to keep going. But so, this for me is a no-go, right? Like if it's in a area, I very much have just said, I just don't want to do it. Especially this one has a basement unit. For me, that's a little bit too much risk. It's something that I've thought a little bit about. Um, because a big part of the risk isn't the economic risk, right? Because you can insure around the economics of the risk of flooding, although it does cost you something to do that. Um, and I actually hadn't looked at the P&Ls and to see like he's got an insurance number, but I didn't notice if there was a flood policy or not. I basically stopped after I figured this out. Um, but I want to point out a couple of things. But so it's not as much the economics of it if you are insure over that risk, but it is the reason I've always avoided these in real life is it's horrible dealing with insurance companies. It's such a process. You don't get compensated for the time that you waste doing it. And I've found even if you have really good insurance, it's still tough for it to not cost you something at the end of the day. Um, and so, that's why I've ruled them out completely when I've been buying in real life. Now, I've thought about relaxing that, when I'm buying small pieces of properties online because one, somebody else is dealing with that problem, right? Not me. And two, my risk is spread out so wide across so many properties that it makes me willing to take on some risks that I'm not in real life. And you've seen that in my, I'm buying in Chicago and Cleveland and Detroit, and I'd never go buy whole properties there for the same sort of reasons, right? Like you just have these huge time sucks from, them. They're just being tougher markets to deal with evictions and, the longer vacancies and whatnot. But again, uh, most of the ones that I'm buying, those, in those markets, though, I'm getting just such a big discount to what I think we can sell them for today that it's worth it to me because for most of those, I'm going to try to push the other owners to sell them. And so that's the discounted token strategy I keep talking about. Just basically flipping tokens, like buying the tokens cheap, selling the property in the real world. Um, so it's a whole different it's a different strategy than looking at real estate and buying for long term. And so, in general, when I'm buying these long term holds on here, I haven't been trying to take on bigger risk, but and honestly, I don't know. I think I made a mistake when I bought this one. This is the 90 Madison one, which is the same co-owner. It's Earl that brought this one on. This is the first. It's the only one I bought of his. I bought it when there was a dip, but I don't know if I missed it or if I just didn't mind for the reasons that we talked about. And it's funny because it's only a couple months ago, but I honestly can't remember if I looked at this because I remember thinking about relaxing certain things. But this is just squarely in a zone AE flood zone. Um, this is the one that I actually own a piece of. Now I own a little piece. I've owned 30 tokens. It's not, I haven't spent a ton of money on here. And I bought it when it was at a pretty good discount to what it had been trading at, just a month earlier, which is part of why I jumped on it. But I think that I really think I just made a mistake. I think I must have missed that in the due diligence, and I don't know how, because I mean, I'm just really big on looking at the flood map every single time. I probably should use a checklist, but I used to have my due diligence checklist that I go through all the time, but I've just gotten so used to doing the same thing over and over again. This worries me a bit. I really don't know. I can't remember. Did I see this and I thought, oh, I'm just buying a little piece, or did I just miss this altogether? I think either one of those is perfectly possible. But it brings me to one of the lessons I want to point out here is you really have to I think a lot of people on the site are betting on certain co-owners, certain sponsors of properties, right? They're saying, this guy's doing a great job on this property that I own. He's bringing other properties to the platform. I'm just going to buy a piece of everything that he buys. And I'm going to basically just outsource my judgment to him, right? I think there's a lot of this going on with a couple of the different co-owners. And I'm not saying that Earl is doing something wrong by owning these properties or bringing them on the platform. I mean, there's plenty of people that invest in properties in flood zones. For me, it's a no-go. It's just something I've always avoided. I've found that you can still find there's plenty of properties that you can find to make money on without doing that. Now, he does have tremendous yields on a lot of his properties, and maybe he wouldn't, achieve that if he wasn't buying in these specific areas. And so, maybe he's getting paid for that additional risk. I really don't know. I haven't ever talked to him about, what he thinks about flood risk. Or I haven't really talked to him much. Talk on the Discord with him a ton about different properties and stuff, but I don't really, I've never talked to him in real life. But so I'm not sure. And I know there's a lot of small risk things that we disagree on as far as like the way we approach things, but in general, I like what he's doing, and I'm trying to buy properties that he has, but I noticed a bunch of them now are like this, right, where they're in a flood zone, and I just am not sure. I don't think that I can get past that, but I think that it's an important lesson that like just because I'm in one of his properties and so far it's worked well for me, it doesn't mean I can just blindly buy every single one of his. And I think honestly, of all the people, I would do that a little bit more for his than for some of the others, but I still don't ever want to just outsource my judgment, right? And you shouldn't either. You should be doing your own due diligence on every. Sorry, my screen recorder just froze again. It gives me the opportunity to say again, you should be doing your own due diligence on every single one of these properties, all the platforms, just like I try to mention as often as possible. Just because I'm buying one of these doesn't mean that you should. And look, I mean, I think I either missed this completely or I decided that I was okay with the risk. And part of the thing, and this is the other thing I want to mention is it might have happened to me because I remember there was quite the time pressure because I had been looking at his properties, but I think I had looked at, I know I hadn't looked, I don't think I had done a full due diligence when I bought this one. I think what happened is I had been looking at it, started to um, got distracted, didn't finish it that day, and then a few days later saw a big dip in the price, and I bought these at $56 and change. They had been trading as high as 65 or 70 that I during the time that I had watched it. So I was like, oh, let me just get that now. So I may have just not finished it. But I do know that I have thought about just relaxing some of my risk criteria because of the wide diversification that I'm getting. So I think it's possible that that's happening. I don't know. But either way, perfectly capable of making mistakes or missing something in any of these. So again, that's why definitely don't follow, blindly follow what I'm doing or what any of the co-owners or other managers are doing. There is another manager that's taking over a lot of properties on the site. And, I know he's done well for some people on some properties. And I think, that's getting some of them to encourage him to move onto ones that I don't necessarily believe would do as well. That's a story for another day. The last thing I wanted to mention is, well, it's really two things about timing. And it's both of them are truly advantages that sites like Lofty and Arc 7 is another one that has it, that you don't get in the real world and you don't get in all of the sites. And so what that is, and it's twofold. There's two things. One, you can, and I guess they're kind of interrelated, right? But you can do your due diligence on these properties. I could decide, and like, so for example, this one, it has a good yield. It maybe is a slight discount, although like we talked about, it's not really that much of a discount to the real world price, but maybe it's a little bit of a discount. Um, but it has some risks that I don't want. Maybe I'd be interested in it at a bigger discount. And I know I've talked about this before, but I can do that up front and then just wait and wait and see. Excuse me. And I get alerts all the time on here for different ones that were discounted. And I've bought tokens in 3 or 4 properties so far this year, and it's always been ones that I've either already owned some or already done the due diligence on. And I got an email that said this one dropped 6% today. And so, you have the ability to just be patient, buy when they're low, maybe unload some when they go back up, and really, get that sort of benefit. So you have that. It's a weird kind of timing that you don't get in real life, right? When a property's on the market, you either have to buy it then or you don't. And so the other piece of that is you don't end up with this crazy bidding war situation or sort of like feeding frenzy, like where I have to either buy that now or not, right? And so that time pressure when properties come up and you've been searching for a while and one comes up that you really like and now there's other people bidding on it. um, I see a lot of especially newer investors make really bad decisions in those situations. And so you don't have that here because they try to create that sort of urgency when they do their initial some of the other sites will call it like their IPO. I don't think I've seen Lofty call it that, but maybe they do, right? Their initial public offering, kind of like with a stock. But I guess I have seen that. A couple of people say that at least. But they're trying to create like, oh, buy it now because it's going to go up in price. I mean, if you look at some of Landa's marketing, they had one blog post about, if you bought all of our IPOs, you would have made X amount, showing those tokens or their shares going up in price. Um, and so you do see that in any of the ones that don't have this secondary trading, right? So like if the only time I could buy these tokens were when they first brought it to market, I'd have that same feeling that I get when I'm out there in the real world. No, I've got to buy it now. Maybe I skip some due diligence, maybe, whatever it is. Um, but that's what one of the reasons I think that I'm really drawn to Lofty is, you can buy into these properties that have been on the platform and operating for 2 or 3 years. And so if I'm buying one, I can look through the notes and all the manager comments and really understand what's been going on. And are we past? Did we already get those big negative surprises? Are we what's going on? But so that timing and that ability to avoid that bidding war or feeding frenzy, I think is really great. And so I hopefully we'll see that secondary market opening up on more of the platforms. Like I said, I mean, it's on Lofty. Arc 7 has it. Mogul doesn't have it at the moment, but they've said that they're going to. create some sort of platform like that, some sort of ability to sell. And I think they said by in next year, so in 2026, they're going to do that. It's yet to be seen how that works, so I don't know. But for me, I think it's a huge benefit, and why, and like, I mean, you can see this, like at some point in time, somebody sold these tokens for $26. Um, the same thing happened here, right? It was kind of interesting around, it was not the same time period. This was June, that was August. Somebody sold these ones even cheaper. Sometimes it's stuff, yeah. $1. Okay, I think that was probably some self-dealing or some, like a non-arm length transaction. But they did go down below 50 at some points. What is this one here? Okay, right at 50. So you do see pretty big dips, and then let me show you in the marketplace. I mean, there's some that even just have much more tremendous dips than that. Oh, and it's underneath my picture, so I'm not gonna move that because I don't want my screen recorder to freeze again. But there are some that just like move incredibly wildly, like to the point where they make no sense at all. Well, let me show you this chart. I think is going to be one. This one, I think it made some sense what happened, but still, let me show you the chart. Um, yeah, since I've been on here, there's been times where you can buy this one for $36, uh, up to $54. Currently, $50.86. Um, there were things happening with this one that I think maybe this was deserved, right? Like there's a lot of uncertainty. But there's all of these. If you have some patience, um, you can take advantage of that, and you don't end up. But so, and the last thing I want to say about the time pressure piece is that one thing that you will experience, and I think that I do sometimes, is that when I get those alerts and there is a dip, and I'm like, oh, I want to buy that dip. Don't just go open it up and buy it. I don't know why that's getting stuck, but oh, so I'm opening the wrong one. What is happening there? There we go. Don't just go right in and buy it. Always open up the property updates. Make sure there's not a new update. Look at your emails. Make sure there's not an email about it. Look in the Discord. Make sure there's not a big discussion about it. Check those three things real quick, right? And then if you want to buy on the dip, I mean, I do that. I've set a price where, this is one that I just think has been um, greatly underpriced. Again, do your own due diligence. Just because I say that doesn't mean it is, right? But I mean, if you see these have been very big swings, man, my computer is just having a hard time right now. Down to 23. I mean, these are all today, right? Like you saw, and I bought a couple of these dips, but if you go out further, I mean, you can get this one down as low as $17. I honestly believe the worst case scenario, if we liquidated this property, put it on the market, and tried to sell it quickly, we're going to get $40 per token, I think. And so, you know, all of these, especially this, I mean, these just seem really wild to me. And honestly, I think $40 is like, I really think that's the worst case scenario. I think there's a decent chance of getting very close to the $50 per token. 45, somewhere in there, I think is possible. Definitely though, yeah, I mean, I can't imagine it going, significantly below 40. So to just see all these dips, I've just been trying to take advantage of every single one of them. And it's something every time I still go back and check, make sure there's not some new news about it. And so that's the whole thing about just being patient, right? Like I want to make sure, you do have the advantage of being able to do that. And so sometimes when you see those dips, it doesn't feel like you can. You just want to jump on it right away. And I just want to encourage you. That's one more time to stop, do a little due diligence. Because one thing you can see, let me point that out one more time, is that a lot of them It's not just, oh, there's one dip. I mean, this dip, okay, if you missed that's really too bad. But for the most part, there's new dips all the time on a lot of these. And so, and even if it's not in this particular property, if you're following 30, 40, 50 properties, on any given day, one of them is going to have a dip, and you're going to have an opportunity to pick up something at a discount that you just might not see. You just don't have that in the real world. And so I think that I have beat that point to death. I think you understand what I'm saying. If you don't, feel free to reach out, and I would love to talk about it more. Obviously, I really like this idea of, basically dollar cost averaging down your basis. I think I've probably said it a bunch of different ways in different videos. So I'm going to be done. I always forget to say, please like and subscribe if you haven't already. And also in the description below, I have links to all of the sites that I'm currently investing on if you want to check those out. Some of them give you free money. I was told today that Lofty's gift credits for referrals should be working again. Maybe I think they said February. So look forward to that if you haven't already done so. Haven't already done that. In any case, until next time. Really sorry about all the rambling tonight. I know. I don't know. I need to. Been a little bit sick, and so I think that's part of it. But I need to get my brain back on point, and I'll try to do that for next time. But until next time, I will keep making mistakes so that you don't have to.